Good weekend all. Ira Epstein of Linn Associates with your SPDR ETF wrap-up for this Sunday, October 4th, 2020, your weekend edition. The big events that are facing us right now aren't so much the economic data reports that's coming out, it's the seriousness or lack of seriousness, we don't know which, of the COVID-19 that President Trump has caught. Many others in Congress now, and especially the Republicans, seem to be catching it as well. We have a situation going where we still don't know if we're going to get a COVID relief bill or not. At this point, we don't. As much as Ms. Pelosi keeps saying, well, she hopes one can get done and so on and so forth, I haven't seen that either side's given much. The impasse is still, besides the money, which there's about a $600 billion difference, there's ideas on how much goes to state aid, municipal aid, whether or not the Republicans can get business liability passed. There's just a host of issues that we're not all privy to. Those talks continue to go on, and there's been hope that now that the president caught COVID-19, maybe he can give some ground. The problem is, even if he wants to give ground, in the Senate, how many of them are willing to give ground? This becomes a big problem, and at this point, the odds are favoring you're not going to get anything done of any substance. In the U.S., in the cinema world, you're seeing that the Regal theaters are, the consideration is to close them down maybe until the first of the year, maybe after that. The big blockbuster movies have been delayed, so much so that maybe it's Christmas they'll reopen, maybe it's first of the year. It's a big state of flux. When you're not making money, you got to stop the bleeding. And that seems to be what they want to do. And that's going to change the way of life. It might mean releases go first run to our cable boxes. We don't know, but it's going to be interesting. All right, let's go, if we could, to the first chart, which is our tech sector. As you know, the market got 3 weeks ago, right in this area here, filled the gap in the chart, has gotten a bounce. But when you look at a weekly chart, there's no trend. If you're like me and you define a trend as a chart setup that's either got higher lows and higher highs for an uptrend, or lower highs, lower lows for a downtrend, you have nothing when you have a lower low and a higher high. There's nothing there. Let's let it go at that. You filter that nothing by looking to see where did the market break to. One of the things that I teach traders is when you get a big break in a market, it's not uncommon to go back and fight a battle at the 18-week average. You did it for 3 weeks here. When you were up over it, you fell back and you fought your battle. You came down, you touched it, and you got a bounce. That is very typical. You get bearish this chart at any close under 109.11. There is no setup right now that I see that can turn this on a weekly basis higher unless you had an outside week up, which means you take out this week's low and high and you close higher for the week. That would be the only thing that can turn the chart bullish. A move under 109.11 and a close under 110.05 would turn the chart bearish. When we take a look at where resistance is, should you rally, it's 123.04, supports 110.05. Momentum is down. So we have a market that's not trending. We have the bias up because the bias I define is where the market closes or the current trade is in relation to the 18-week average of closes. When it's over it, bias is up. Under it, bias is down. And bias is a filter on the swing line. When I look at the industrial sector, I have a higher high, a lower low. Should the market break down, a lot of support between the 100-week average, the 18-week average, and the 200-week. All right here, all three. So you got to pay attention to those numbers and assume that the trade, and there's long-term investors that'll say, hey, I want into that. This is no more than a pullback, and the market after the election is going to do blah, 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 blah. When you look at the energy sector, you've been in a downtrend, and what's hurting energy is obviously COVID. The cases are serious, and that hurts everything. Airplanes, you're not flying that much. Ships, they're not traveling. Carnival ships and so on aren't traveling in America, and the other lines, no, that's not going to happen at this point. Are you really traveling that much in your car? Well, the big city traffic is back. I can tell you Chicago has rush hours, but where are the people going? They're not going to the financial district. They seem to be traveling from north to south or east to west to what the extremes are. I don't see the city that crowded. On QQQ, it is similar to the XLK. We have the lower low, higher high. The first challenge, which you'd expect of the upper Bollinger Band, failed. And that's the first challenge since March. Now, failure is probably not the right word. It worked the way that I teach it in my charting course. I teach that the first time you hit a Bollinger Band, that is often where the pros take money off the table. Why? Because 95% of the time the market will trade within the bands, not out of them. So if that's the case, and it's proven statistically, it's how the band adjusts to the markets and so on, why not? And look what it did. It fell back to that number, what I call that line in the sand. So I think the pros did fine in this market. You have the same thing going on with your emerging markets. Now, emerging markets get more bearish should the market get under 62.14 and close under 63.30. That would give you lower highs and a lower low. But on the first challenge of the 100-week and the 18-week, I think the traders that have been sidelined with cash came into this market because that's what ETFs are about. Rather than picking an individual event stock, you're trading a basket of them. And if they like that basket, I think they were buying that. It's not the way I teach charting, but that's what I think was going on. In GLD, you fell down to the 18-week average after having been over even the upper Bollinger Band and then finally fallen back there. The market's in a downtrend in terms of the swing line. The bias is up and momentum is pointing down. On GDX, the miners have managed to try to stay over this 18-week average. Any close under it and under 37.08, if that's just taken out, turns the trend down here. This is a very precarious position for the miners at this point. Same in silver itself. All you did is you went up, got over the Bollinger Bands, got it, 3 or 4 times in a row, and then the market just let go. As, if you were with me when I was doing these, I was predicting that it was going to move to the right-hand side, which it did, and then it let go. Back to right where I'd expect it to hold. The long-term traders probably came in there. Got to understand on weekly charts when you're looking at them, it's long-term thought. Some people don't even use them for the idea of chart patterns. They use them, hey, that's a value area for me. Got to understand all these different things. I, of course, am a chartist, and as a chartist, I'm not interested in value. I'm interested in the chart pattern fitting into just what we're talking about. TLT is bearish. You have lower highs, lower lows. Now, to negate the bear pattern, you've got to take out 165.42. Barring that, until it's taken out, I would expect the pros selling at 164.58. Momentum still pointing down in the market and bias down. In the euro, the market's slipping away back to the downside here. Big support, 109.22 to 108.90. That is again where I expect to see the pros. Anybody short and the long-term investor that thinks the euro is still going to be a currency to own, that's where I'm assuming they're going to try to step in. Again, not my method of trading, but I understand what they do. It's also on my method a way that I'm looking for very big support to show up in the market. So if you like this type of analysis, you're going to love what I do in the afternoon. Now, let me explain the afternoon. At about 4 o'clock, typically, I'm recording your Spider ETF video for my subscribers. I'm telling them at that hour the reports for the next day, what's coming out, the estimates for the reports, what's going on, what the markets thought during the current day, and what you should be looking at. I'm typically doing 35, 36 charts on the Spider ETFs. It starts off with technical analysis. I certainly hit the fundamentals like you just heard me talk about Regal, Cineworld, what's going on there, and bring you into what the politics of the day are when I think it's appropriate. I don't give you my politics, I'm telling you the politics of the day, such as COVID-19. I cover all these different areas in depth, specific buy, sell. You're watching the weekly free video on YouTube. Now, there's one of these for all of these in depth, so I cover all of them. You're only getting a few of these, and they don't have all the studies. They're not getting the same wording that I put out in these by any stretch, so I cover a lot more there, and that's what people want. This can't be expensive. I don't want it to be expensive. I want to compete with Starbucks. I know that sounds crazy, but if you can buy a cup of coffee for yourself, why can't you invest at the same time and say, hey, for about that price, I can take a look at what Ira's doing. And that's how I do it. Just think about it. You buy a large drink, the Grande, one of the big boys, $8.95 with tip, probably in that ballpark, 30 days of my work. If you like it, you can continue. It goes up in price, no question about it, but not expensive. And if you don't like it, just stop. You can do it right online. It's that simple. And I like to know why you don't like it. I have some people tell me it's price. Hey, at this price, if you don't want to pay anything, I'm not giving you my advice. I promise that isn't going to happen. Your doctor's not going to do it for free. Your lawyer's not going to do it for free. And I most certainly will not. But how do you get this? Go read about it. At our website, under the word research, you'll read about our futures. We have a combo offer. A lot of people like to tie the ETF in the afternoon, and they understand the importance of understanding the futures, what they're doing. Really important, especially the morning before you open at 8:30 in these ETFs, right? So they get that, and now they got a whole package. Very, very important. We get a lot of people that do that. I'm Ira Epstein. Thanks for watching, and I will see you all on Monday. Take care.